Question: is this an Elliott wave, a zigzag, a chart, a pattern? Question: is this an Elliott wave, a zigzag, a chart, a pattern? We are on a monthly chart of Acorn Incorporation, EPIC AKRX, Alpha Kilo Romeo S-Ray. And we can see that from 2009, using the 2009 as our reference point, this stock began, a bullish trend. By the way, this stock is a Russell 1000 component. All right, so here it is. It's an American stock that began a bullish trend. You can see was trending up from 2009 up to 2015 right here. And then now we see a correction taking place here. The question we want to answer in this tutorial is this an Elliott wave, a zigzag, a chart, a pattern? Alright? So what is a zigzag, a chart pattern? Alright? The formation of the zigzag pattern is right here. When you have a bullish trend, the zigzag pattern is formed like this. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. The shape of the zigzag Elliott wave pattern is in the form of zigzag. 1, 2, 3. The first part is subdivided into 5 mono waves. The second part is subdivided into 3 waves. And the third part is subdivided also into 5 waves. Alright, so that's what we call A, B, C correction, which is a zigzag correction in this case. The A being subdivided into 5 mono waves, the B being subdivided into 3 mono waves, and the C part of the zigzag pattern being subdivided also into 5 mono waves. So when we are talking about the internal waves of the zigzag pattern is 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Alright? So now, is this a zigzag pattern? Before we clarify this question, the first thing that we want to understand, as I show you already on this chart, alright, if you pay attention to the pattern, so we have first the A part of the zigzag pattern being subdivided into 5. But when traders see, a move down into 5 mono wave, they are thinking of an impulsive wave. But we know that there is a corrective wave that is formed also of 5 mono wave, which is the zigzag. So when we see it come down like this, we see a trending phase, and you see 1, 2, 3, 4, 5 down, as I've been showing you already on the chart. So this is the trending phase. Now look carefully. The price went down like this. Alright. Went up like this. And then it went down again. Here it is. And then it went up a bit. Alright. Now it came down again. Right here. So here we have a trending phase that is followed by 1, 2, 3, 4, 5. It is the part A for alpha, of the zigzag, Elliott wave pattern. If this is going to be a zigzag pattern, the next part of this puzzle will be 1, 2, 3, forming the B part of the zigzag pattern. So 1, 2, 3, 4, 5, 1, 2, 3. And then we will expect another move down, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Again here. Remember the pattern that I've been showing you right here. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. This is the zigzag, Elliott wave pattern. Let's go back again to the chart. So Here we are, we have a trend in fares, and now the price went down 1, 2, 3, 4, 5. But we know that this move down is not an impulsive wave because it's correcting a trend in fares. So because we know that there are few corrective waves that have a 5-minute wave, okay, the zigzag pattern and the flat correction. The flat correction 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. For the zigzag pattern, the internal waves are 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. All right. So now that we are looking at this monthly chart of Acon Incorporation, a Russell 1000 components on the monthly chart, we see that the trend in fares, the correction is formed of a 5-minute wave down. So the first thing that is coming to our mind is what? A flat correction. But remember, when a pattern is being formed, all right, so we may say at this point in time that it looks to us that a zigzag pattern is underway. But it does not mean that the price cannot print something else out, right? Because a pattern will become that pattern only if the pattern is completed. Am I making sense? So now we see, now it came down 1, 2, 3, 4, 5. We leave form 1, 2, 3 out, and then 1, 2, 3, 4, 5 down. But because we know a little bit about the flat, the zigzag pattern, we have a little bit of edge. We know that, okay, the minimum price move is 3. Now the price print 5. So at this point in time that we see 1, 2, 3, 4, 5 down, after a correction, we will expect the price, here it is, after this move down, we will expect the price to bounce up here. 1, 2, 3, 4, 5, we will expect the price to go back up. But now, will it complete the pattern, the zigzag pattern? The question is this an Elliott wave, a zigzag chart pattern? Sometime, my friend, traders get into trouble because as they see that this 1, 2, 3, 4, 5, they say definitely the price will form a zigzag pattern. But sometimes the price will do something completely different, which means the price will just go up in a straight line instead of forming, which means 1, 2, 3, 4, 5 down like this, and then the price will just go up, all right, without forming the zigzag pattern. So in order to trade the zigzag pattern, there are different areas, different time, and different places that traders can take advantage of the pattern. Let's go back again to this drawing here. So now we see here, we see 1, 2, 3, 4, 5 down. At the end of the 5 move, we can look for an opportunity to buy because we know that, okay, 1, 2, 3, 4, 5, there's a high chance we may have 1, 2, 3. So at the end of 1, 2, 3, 4, 5, this is a good place to draw a line. Remember here, you will draw a line here, and then you will implement a top-down trading method. So you will expect a bounce up as a swing trader, as a day trader. So you see here, a trend in fares, 1, 2, 3, 4, 5. You draw your warning line, so you will say priority to bullish signal above 1654 and priority to bearish signal below 1657. And then you will implement a top-down trading method to trade it here because you see 1, 2, 3, 4, 5 down. At this point in time, this is the best place and the best time to look for an opportunity to take advantage of the zigzag pattern. So you will buy here and you will see what the price will do. You manage your trade carefully. You know that there's a high chance that it may form, okay, 1, 2, 3 going up. Also, there's a high chance that the price may go straight up. Okay, so how can we predict that the price is definitely, or is, how can we predict that there is a high chance that in this case we are likely to see, okay, a zigzag pattern, okay? Another thing that we can use to predict that this is definitely going to be a zigzag pattern, we can use the internal waves of the second wave. Remember when we are talking about Elliott wave forecast, we use the internal wave of the first wave to forecast the whole multi-wave, and we use the internal wave of the second wave to forecast the internal wave of the correction. go back to the videos that we talk about wave forecast at 24 Elliott wave YouTube channel. So here it is. We see 1, 2, 3, 4, 5 now. If we can dissect or identify, okay, the internal wave or the second wave, here is quite difficult. As you can see, the price went up in a straight line, pull back, and then continue to go up. It's quite difficult to see the internal wave of the second wave. Here it is. So the point that I'm making here is that how can we forecast there is a high chance that we may have, okay, a zigzag underway after the motive wave. So the first sign is that is this 1, 2, 3, 4, 5 down, alerting us that probably this is going to be a zigzag pattern. But we do not want to fall into the trap of aggressive traders. One step at a time. The best place to buy is at the lowest point after the 5 move down. The price may not complete the zigzag pattern, but instead may go up in straight line. So in order to have a bit of idea whether we are likely, we have more chance that a zigzag pattern may take place, we can use the internal waves of the second wave to see whether, okay, there is a zigzag pattern during the second wave, during the second Elliott wave. All right, so the internal waves of the second wave can help us predict the corrective phase of the Elliott wave cycle. All right. There is another method that we can use, is to go a little bit into the past to see how this stock was correcting itself in the past. You will notice that some stock we always, if you look carefully, talking about the characteristic of each financial instrument, some stock very often will finish the trending phase with a flat correction. So if you look into the past, this is the pattern that they have been using in the past. So you see you go a trending phase, flat correction, a new cycle began. All right, trending phase, flat correction, a new trend began. Some stock you will see clearly all the time is a zigzag. You see, you come down. Sometimes you may not see the internal wave as is clear to us here. You may see once straight down, the price will come down in ABC. So you see here, some stock you will see that it trend like this, but instead of a flat correction, most of the time you will see that stock will come down 1, 2, 3, forming the ABC correction. This is a zigzag pattern. Some stock will finish all the time with a sharp correction. So talking about the past, the behavior of a specific financial instrument over a time, all right, we can have a bit of idea about what is likely to take place. So if I go back now into the past of this stock, Acom Incorporation, I want to see how this stock, how the correction was taking place in the past, which pattern this stock is usually printing out during the corrective phase. That can also help me have a bit of idea what kind of correction is likely to take place today. All right? Remember what I said to you before, there is nothing new under the sun. Okay, the sun, S-U-N. All right, so here it is. You can see that from 2003, the same stock was trending from 2003 up to beginning of 2008. Now a correction has begun here, and once again you can see that the stock came down 1, okay, 2, all right, easy, 3, all right, 4. And 5. Now it's looking to me that this stock Acom Incorporation very often, so it done it before. After a trending phase, it came down 1, 2, 3, 4, 5. This is from 2008 to 2009. But let's see what has happened after this move. So if you were here during that time, you will be drawing, okay, your horizontal line after the 5 move down here, and you will be saying priority to bullish signal above this level, $1, and priority to bearish signal below, as I told you already, okay? And you will be expecting, okay, a zigzag pattern, okay, above the level of $1 because we have a trending phase followed by 1, 2, 3, 4, 5 down. All right, so this is a stock after a trending phase. The correction is taking place in 5 manual wave. 1, 2, 3, 4, 5. And let's see what has happened after these 5 move down in the past. So you understand the exercise we are doing now is to look in the past and see what has happened before to have a bit of idea about the characteristic of this stock. Here it is, my friend. After the 5 moved down in the past during from 2008 to 2009, this stock just went up in a straight line without forming the zigzag pattern. All right, you see now? So if you were expecting a zigzag pattern after these 5 moves down, which is a correction, all right, you will be surprised that the price just went up in a straight line. And from 2009, this stock was trending after that 5 moved down, where traders were expecting a zigzag pattern. One more time again, if you go back again into the past, we can use again Fibonacci retracement. You can see that the stock came down almost to the starting point. So I don't have enough data here, but with the information that I have, it looks to me that the trending phase, we came down 1, 2, 3, 4, 5 to the starting point. There is a bit of dissimilarity here because we have now 5 moved down, but the price did not come down to the starting point. It's the starting point of our trading phase. So the question that I have for you today is this, a linear wave, a zigzag, a chart pattern. As always, we must use a top-down trading method. For the zigzag pattern, all right, we can buy, if I go back again to the charts, all right, here we are. If you see 5 move down, you can look for an opportunity to buy here. If you see 1, 2, 3 up, you draw your warning line. You will say priority to bearish signal below and priority to bullish signal above because the minimum price move is free. So 1, 2, 3, you draw your line. So if it's going to continue to go up, you won't fall into that trap because you have your warning line there and you are giving priority to bullish signal above and you are giving priority to bearish signal below. All right, so here you draw your warning line, priority to bearish signal below, priority to bullish signal above, using a top-down trading method to trade it. If you come down again, 1, 2, 3, 4, 5. So here, if you see 1, 2, 3, so you see now 1, 2, 3, 4, 5, 1, 2, 3 up. You draw your warning line. If it start going down, you know that it's going to print it down 1, 2, 3, 4, 5. So if you sell it here, you drop it down. You can take some profit, wait for it to bounce up again, you will sell it again, wait for it to bounce up again, and you will sell it again, and you are out of the trade after you see 1, 2, 3, 4, 5. Now, once more time, you will draw another warning line here, priority to bullish signal above, and priority to bearish signal below, and again, you will be part of the trade. The question is this a linear wave, a zigzag, a chart, a pattern? If you have any question, put in the comment section, any suggestion, put in the comment section. You have the answer to this question, put in the comment section, all right? And in due course, we'll record another video to answer your specific question. We are the TSTW24 traders talking about question. Is this a linear wave, a zigzag chart pattern? We were analyzing a Corn Incorporation, Epic Alpha Kilo Romeo S-Ray, a Russell 1000 component. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Speak to you soon.